First, happy end of the month, happy end of the week, happy end of the quarter. Let's get started for today's Pulver report. We didn't have a session on Monday because I had a little time zone confusion. I was in Arizona this week and didn't realize that they were on Pacific time. So we run into the trading rooms this week on Monday, and my apologies. We'll be back Mondays and Fridays starting next week. USO crossing 66. Okay, good. That takes care of some of those credit spreads. Watching some XOM. Price needs to stay below 113 today, so I'll be monitoring that level. Coinbase sitting around 64. Have a bear call spread. What else do we have going on today? Microsoft and Meta, just checking on those. KHC, going to get the stock called away today at 37. That'll give me close to 9 or 10 bucks a share. XOM just had a chart alarm at 110. Watching that level closely today. Let's see here. KHC getting called away at 37. What else do I have covered today? Pfizer I've got covered at 41. I'll just jump in and repair that again. It's either 41 or 42 for a covered call. So if it doesn't get called away, Charlie, I'm there at 41.70 with a monthly pivot. Let me move this up to 42. I think that's a covered call level. $42 there. Otherwise, I'll just add another probably monthly expiration like April 20th or 21st. April. Let's go April. April 21st should be the monthly expiration. So I'll add a 40, probably a $41.50 or $42 covered call there. All right. All good. What else is going on? Let me log into YouTube, say hi to everybody. Kick things off. Equities on demand coming up shortly. All right, David, good morning. Gary, good morning. Robert, good morning. Let me jump in. I guess I got to switch things over, right? Risk disclaimer, we know there's risk in trading. Please don't always use trade capital only. I should have done this at the very beginning. You know the deal. Social media, make sure it's the real me, youtube.com/Chris Pulver. The real handles, facebook.com, real Chris Pulver, Instagram, Twitter, verified at Chris Pulver. Let's get into the charts. There we go. Let me jump into Telegram and let everyone know that we're live. Here's our link. So we're going Flex Room live for Pulver Report weekly recap. And Equities on Demand live for Pulver Report weekly recap. All right. Morning, Chris. Good morning, Donna. Dorian, good morning. Rex, good morning. And good morning, John. Happy Friday indeed. Perry, good morning. Chart alarms went off. Apple 162.50, USO 66, XOM 110. Tracking that. Let me check a couple of alerts. All right, let's take a look at currency strength. I know we had PCE data today. Is that correct? We had GDP for the CAD came in slightly better than expected. Core PCE came in 1/10 of 1% lower, which again, anything that's inflation related, seeing a softer move than forecast is good. This was revised down from 0.6 to 0.5, forecast 0.4, 0.3. So, this isn't CPI, but core PCE, that's also a good sign that prices are going down. And we'll see how things play out. Currency strength chart this morning, pretty quiet considering it's end of week, end of month, end of quarter. Japanese yen, the yo-yo effect as usual. A lot of volatility there in the short term. Everything's clustered for today. Let's keep an eye on everything. Do we have another expansion during the U.S. session? Possibly. We haven't had a break above 40 or below 50 either way. So pretty quiet on the Forex front. And we'll see if that changes. Wall Street wise, SPY and Qs, we're trading at 405. A bit of a melt up, but still stuck between major levels. This high, this low, this high, this low. More indecision, or is the market going to price in? I mean, one thing I didn't love about this week is we have a pretty noticeable gap right here, right here. Even this morning we have a gap. So it may run out of steam here around this 405 area. If there's some resistance, we just settle back in, and there's no major developments as far as movement goes. Bulls really, I mean, they have a chance to break. If we break above 420, then all of a sudden we're looking at the August high coming back. We break below 380 to 375, then we're looking for retest of everything bad. But we could stay inside this range for a while, right? We could melt up into this area, come back and fill some gaps, stay in the middle, and I could see this playing out through most of Q1, Q2, perhaps. There's room, right? We could have a little melt up here, even to kick off Q2. We could run up into these highs, get everyone excited, and then before the summer is done, the old saying, "Sell and may go away." We could still reject off these levels and still be indecisive. Fed Watch Tool. We're watching this week in the trading rooms. So we're looking for it's literally a 50-50 split right now for the May rate decision for the Fed. I think next week we have two rate decisions. We have Aussie rate decision expected to raise rates 25 basis points. New Zealand rate decision expected to raise rates by 25 to 50 basis points. I don't know if that popped up in the calendar yet, but we looked at that yesterday in the trading room. Let's go next week. Okay. Morning, Robert. Morning, FK. Morning, Scott. Dare, good morning. Let's go next week. Next week. So we have ISM PMI for the U.S., CPI for the Swiss, 0.4%. We'll see if that improves a little bit. That is monthly CPI. Aussie cash rate expected. Ooh, okay, so that's different. We saw it this week. Yesterday, we looked at this in the trading room for the flex trading room. 3.85 was expected. Now it's 3.6. So it looks like the RBA may pause. RBNZ looking for another 25 basis points to get to 5%. If they get to 5%, that would match essentially what the U.S. Fed rate is at right now. ADP non-farm on Wednesday. This is an interesting week. We have Thursday unemployment claims, CAD numbers, and Friday we have non-farm payroll, even though it's Good Friday and a bank holiday. So Wall Street is closed. One second. All right, so that's coming next week. So we'll kick things off with Q2. Pretty busy week. Also, it's time to go to Augusta next week, right? Fun times at the old Masters, first major of the year. Morning DPS. All right, so that's coming. Rate decisions. This was, yeah, I thought we'd have a RBA hike as well as a RBNZ hike. Looks like we just have RBNZ for right now. It's subject to change. We'll find out. This is Tuesday, and actually it's all day Tuesday, but technically Tuesday at 10 p.m. is going to be Wednesday's trading day. So between Tuesday, Wednesday, rate decisions for Australia, New Zealand, and then Thursday, Friday, employment news, CAD on Thursday, US on Friday. If you'd like to, for my Friday session, we can start a little bit early. Actually, no, never mind. I'm just going to do opening bell. I've done enough sessions where if you want to trade that, you know how to trade it. You can get some Masterflex, do 1-minute charts. It's a holiday trading event, so there could be some big, 1-minute candles. There might be some drifting, some good volatility to look for, but I'm just going to do my thing. Yeah, usually Mondays and Fridays I play basketball in the mornings here at 5:30 Mountain Time, so I'll just do my 9:30 opening bell. Okay, let's go back to this. Any requests for today? We could take a look at our currencies. We took a couple of fresh trades this week. We had a pending order on pound CAD. Still hasn't activated yet. We're looking at a stop sell below the lows here on 66.75. And what else do we do this week in Flex? Oops, I need to go to the Flex doc right here. So there's Flex doc and EOD have some expirations. A couple things I need to keep tabs on today. 331 expiration. Coinbase, I have a bear call spread 75 by 80. That's just a short-term one for today. Coinbase trading at 65. I doubt we're going to 75 today, so that should be full profit. I did a bunch of rolls this week. So Meta was rolled, Microsoft was rolled. We rolled out the SPY. That was a bear call spread. Silver should be full profit. We have a couple of credit spreads on silver, 18 by 1750, and SLV is doing really well. Up some profit. Right now it's trading at 22.13, chart alarm at 22.50. I'm going to start looking to cover this. My break even's around 17 bucks. So if I can start covering this and start to get 5.50 a share, I've got a pretty decent position in this to make some good money on SLV. So we start tapping some chart alarms, start looking left in this $24 to $25 zone. I'm going to be pretty pleased losing SLV as far as just taking profit. Gold. I do think gold has legs to run. It seems like it's pausing at this time. I think there's room to get to 2,000 plus. We have major resistance at 2075. One thing that we might be considering is if we have the courage to kind of buy in this area, buy small, and if it pulls back, I'm interested in buying again. But I think if we get to this high, there is a chance that we break and go way higher. Especially with a couple of things. If there is a drastic movement against the dollar, and if we see this as the old inflation play, this has always kind of been treated as a nice inflation hedge. It's been an anti-dollar play, which we're starting to see more and more movements between, Brazil, Russia, India, China, petrodollars and things like that, moving away from the U.S. dollar to do business and transact sans U.S. dollar. So gold could be another potential winner. And if we break above, 2,100, we're talking 2,400 just based on the size of this move. So if we measure this, project this higher, that gets us up towards 24 plus. All right. So I do like hanging there, hanging long, gold and silver for right now. DXY and oil, let's take a look at those. 102.32, the dollar's been progressively weaker. We've been watching them closely. Yeah, I mean, dollar couple levels. Either we're forming a higher low right now for this to get a run, and if we get a run in the dollar, that's probably a risk-on move in the stock market. Um, However, a slide in the dollar back to equal lows. Couple things we're looking at structurally is we have this big slide. If we went 1, 2, 3, we look for a possible bounce on the dollar at equal lows, or we have this high to low and we push a little bit lower, then we come back for a reversal pattern in here. All right, so possibly a little bit lower and dollar weakness could prevail. Then we start looking for confirmation and alignments off the lows. But right now, it looks like a lot of positioning. New Zealand dollar is a good one to watch. It's stuck big time. We break above this high at 6,300. I think there's room, above 63 to head all the way back up to 65. If we break below, this, I think we had a horizontal level in our workspace. But basically, the bulls need to break above 63, and the bears need to break below. Let's check this price level here. If the bears can break below around 61.50. So we're looking at 6,300 here on the bull side and 61.50 on the downside. So a couple of legs like so. Right, so this is a good one to watch and to see how that dollar index prevails. Plus, we have news on both next week. We have RBNZ rate decision plus CAD employment on Thursday, U.S. employment on Friday. So I think by the end of the week, we should be pretty clear on what direction to go. If we get a nice clean break up here, looking to go long. We get a nice clean break below here, looking to go short. There's still room to find some pivots and pockets back here. There's room to retest the high up towards 65. All right, so that's a good one to keep an eye on. I'm still trading against a Swiss basket. Aussie Swiss, a lot of consolidation, possibly a falling wedge. So with this low in here, this low, this low, this low, this high, this trend line, some time on the right-hand side of the trend line, looking to see if we can carve out that move right there to get back to 65 plus. And hopefully this is not done. If we take out this high, let's say that we have a little falling wedge action in here, and we break the high, head back up to 65, 6,600. Well, any pullback, I'm still looking to buy and take this back up towards that level. So looking for a big reversal pattern on Aussie Swiss. If it starts to come to fruition, I'll start looking to stack some orders up. CAD Swiss, I'm still long. 67.50. We need to see if we can break above 68, then break above 69.30. Oil really quickly just reminded me, oil's up to 75.25. Again, watching XOM today, trading at 109. Okay, I think we're safe at that 113. Euro Swiss trading at 99.41, still struggling at this parity level. We get a break above this structure. Hopefully that's enough to push that move up. So I like this pocket. I like this 105 100 level. I'm looking for profit up here at 105. And then pound Swiss, potential crown pattern. Need to see if we can get a break above this 200 EMA on the daily. New Zealand Swiss, another one with a potential. Let me put a trend line here. Just going to watch this structure there. So if we break that trend line, fantastic. If we come back into equal lows, watching that level, watching this level, watching some right side of the trend line to start scooping up some really good prices, really. Some buy and hold. Swiss National Bank sitting at 1.5%. If the RBNZ raises to 5%, there's still a nice swap differential there, holding Kiwi Swiss long. And then dollar Swiss, kind of a range-bound trade at the moment. Still have the yearly pivot and big pockets up here. And if we settle into some lows, which would be fine, we settle back into this low, settle back into this low, 9,000 to 8,800. I'm still looking to buy. See if we can get a reversal pattern that's noticeable. Take this back to range highs at 1.00 or higher. Big pocket levels around 97 to 98. So I'm still going to hold tight on a lot of my Swiss positions and see if I can enjoy that 2.5%, 3.5%, 4% positive rollover this year. What else we have going on for stocks today? A lot of roll stocks, like I said. Silver for full profit. Tesla, we rolled out. We're going to take a loss on the 177 by 177.50. I feel like Tesla's still staying above 190, so we didn't really have to roll that out. Yep, we're at 199. We didn't have to roll that out to April, but this is what we did. So it was price was trading around 183. We had a 190 and a 175. If we're above 190, full profit. If we're below 175, full profit. So I'm taking a loss today on the 175. And then I've got the 190 plus that's out to April, and I still have a 175 out to April as well. I just matched it up so it's essentially a straddle. What else we have? That's Tesla. Uber, I'm watching this one. I have a $31 covered call. We're trading at 31.30. I rolled this to April to lower my cost basis even further. I think my break even now is like $27.15. So if I get it called away at 31 or 31.50, that's pretty good. Intel had a great week this week. Intel's trading up to 32.16. I have a 31.50 covered call. That'll be a nice one to get called away after doing some repairs here in the the $25, $26 zone. And let's see here, what else? XOM looking for full profit. Tesla added that one. That's fine. Alcoa taking a small loss there. Credit Suisse, we dumped a lot of early assignments on Credit Suisse. Johnson & Johnson early assignments there. KHC getting it called away. Qs. Let's see. Are the Qs above 316 to 315? Where are the Qs at? Qs trading at 317. Oh, snap. We might have some full profit. Okay. So if we have the 315 bull put side, then that's full profit today. I think the net's like 30 cents, 30 or 30. It's like 30 to 35 cents net profit between that straddle that we had in the Qs and the SPY. So that's pretty good. Any requests, any charts you'd like me to take a look at today before we wrap things up? And then we'll jump into equities on demand. We did a couple of scans this week as well. Let me bring over equities on demand here. Here's a scan that I was pretty interested in. Actually, I found some really good stocks, really good technicals, honestly. So I was looking for companies that are profitable, have earnings per share growth over the next 5 years. So we're looking for positive cash flow, limited debt. We're looking at beat up stocks that are 50+% off the highs, and that could be the peak in 2022 in January. It could be the highs in 2021, depending on what sector it's in. We're looking for liquid stocks, obviously, with a million plus average volume, optionable and short. We're not just going to short stocks. We're going to trade options around them, and then beta over 1. So we're looking for some decent volatility stocks. The good thing was there's a variety of sectors. Of this list here, we had 24. We reviewed all 20 this week in Equities on Demand, and we probably found, I'd say, about 8 to 10 that we really liked as far as technicals. Set chart alarms. If this comes back, I'm going to save this stock and keep it handy. But if stock comes in decent levels, then it's worth exploring some options. It's worth even taking some kind of bargain ownership. Give 100 shares a chance for maybe $500 or $1,000 or something like that. Okay, so we're looking for opportunity. That is for sure. And again, a little bit of a melt up to wrap up the quarter as we kick off into April. Last year, let's just take a look into 2022. I know 2022 is not the same as 2023, but looking into March and April of last year, take a look at this. This is the end of March, right up here. And then as we get into April, there was a pretty big drop. Now, we don't have the Fed coming out until the first part of May. So are we going to continue to see a bit of a melt up with the absence of the Fed? Maybe. But if this is, I don't know. I mean, I still think the August high from 2022 and the October low from 2022 are the big spots, both in the SPY and the Qs. Those are the big levels. So if we're looking to break, I mean, we have a slightly higher high. We could have something like this happening where we come up to maybe 420, 425 and then reject off that. We just have some volatility here. We'll take a look at the VIX really quickly, which was in the $18, $19 zone. Yep, 1892. We take a look at the bond market. Let's go short term SHY. SHY hanging in there at 82. IEF is 7 to 10 year hanging in there at 98. TLT hanging in there at 105. Is the bond market trying to tell us something? If the bond market goes higher, I would expect that's a bad sign for equities. Our yields, if we go to the US 1-year yield is still pulling back. 2-year still pulling back. 10-year 3.5. What's the 2 and 10-year? 3.5 in the 10. and 4.0. So we're still about a 0.6% inverted yield curve, and that's been one of the longest we've had in a long time. Not really sure what the bond market's telling us. This drop, this BPS basis points drop that we saw change just recently in the last month or so, is one of the biggest moves we've seen since 1987. Right around that 2 or 3 month window over the Black Friday crash in October of 1987. So I'm not sure if the bond market's trying to tell us something, or if it's a combination of, a pause and the bond market's looking at maybe becoming a better hedge and a better fixed income vehicle. I'm not quite sure, but we're still kind of torn on the whole Fed notion of, are they raising, are they not? We're split between rate hikes for May. June is also looking for still probably a pause. July, I mean, this is the same right now. So if we have a pause through July, it looks like September, November, December, possibly rate cuts start. Maybe a 25 to 50 basis points cut. And so I'm just throwing it out there. We might just have a pause, and this might slow down the market overall. And then in Q4 is where things get a little bit more exciting. If the Fed ends up cutting Q4, I think that Q4 could be a very bullish quarter. Um, but that being said, it's like we've got to figure out how to survive for the next, 6 months essentially until we get to Q4, and then maybe that's where the market picks up some really good momentum and starts to rally. So time will tell. Okay, good stuff, good stuff. All right, let me take a quick peek at some robots. How did we do this week? Perfect Storm. Perfect Storm Pro. Oops, that's not what I wanted. And Pockets Pattern Pro. See if that will. There we go. Okay. So Perfect Storm, how did we do? This week, grabbed 241 pips on the Perfect Storm. For the year, it's up 5,100 pips. Perfect Storm Pro. This week, grabbed 444 pips. For the year's up 4,400 pips. Pockets Pattern Pro. This week, grabbed 236 pips. For the year, up 6,000 pips. So off to a pretty good start, and just consistent with these robots. These are, essentially efficiency-based robots, range-based robots, small wins, consistent wins. Try not to get in any trouble. Keep the drawdown pretty tight. The Pockets Pattern Pro robot is in. Let me go drawdown here. Jumped up a little bit. We were in about a 2% drawdown. Now it's up to about 4.86%, but still producing some good gains overall. Perfect Storm Pro drawdown is sitting around 13%. That might have a couple of martingale trades where it's a lot step increase to make that drawdown a little bit bigger, but still producing some nice wins. Overall, I mean, it's been, profit wise, it's been consistent from September of 2022 to now. Redeploying that robot, that's been what, 6 months of trading, 6 months capturing about 4,400 pips. Not too shabby. And then Perfect Storm, the original Perfect Storm, this has been running live for over 3 years. 11.5% drawdown. This one's been running since I had to reset the server on this one, so this has been running since early 2022. And once we were able to reset the settings, it's been silky smooth since March. So literally, it's been running for a solid year, and the equity curve looks pretty fantastic. So, anywho, trade size wise, lots of 0.01s, 0.02s. I keep the trade size small. I don't want to worry about it. I just want to check it on Fridays. Okay, yeah, I know. I was looking at it over here. So here's my Perfect Storm, or that's my Pockets Pattern Pro. I just check those on my FX book, and I just publish those in my newsletter for some results. Best pairs, Daniel. It's in your classroom. I mean, it's been the same 8 currency pairs for Perfect Storm for 3 years. So it's mostly commodity-based pairs. I don't do any yen crosses. I don't do any dollar crosses, and I don't do. I think the only pound pairs that I do is pound CAD. So Euro CAD, pound CAD, and then the rest it's like Aussie CAD, New Zealand CAD, Aussie Swiss, New Zealand Swiss, Aussie New Zealand, Euro Swiss, Euro Pound. I think collectively those are just low volatility, very high efficient currency pairs. So there's like 8 pairs that I trade live. I think I've had it up to 10, and as low as 6, but it's always been between 6 and 10 currency pairs, and it's right on the perfect storm document in the classroom. It's right in the recording for the last video that we did, which would have been a long time ago. I mean, it's not a class I have to do a lot of maintenance on because the robot still runs as is. Okay. All right. Hey, it's 10:02. I got to run. Equities on Demand students, I'll see you in the trading rooms. Any questions for me today? If not, all good. Things to watch. Obviously, watching the markets. Got to keep an eye on XOM, make sure that stays below 113. We'll see how the month finishes up as well as the quarter, trading at 109.58. I'll probably look at some other expirations out here. 120 highs and 99 lows. Might look at a couple of weekly expirations and see if I can get some, kind of out of the money credit here. I've been doing that quite a bit the last couple of weeks to generate some income and get some cash into these accounts. But that's it. Busy as usual, always a grind, and the work never ends. Okay, have a good week. Have a good weekend, and see you Monday for YouTube. Okay, thanks everybody. Bye.